All right. What is going on, future me? Hope all is well. God bless you. Happy Easter. Happy, good, obviously had Good Friday, Easter Sunday now. I'm recording this on Sunday about an hour and 15 minutes out from 5 p.m. the market open. And so, yeah, as with every week, want to bring in this coming week with my pre-market plan. And there was a lot of dollar news last week. There was absolutely no pound or yen news, so pretty slow week for the pair. I mean, obviously not, but I'll get into it when I get into it. But a lot more, catalysts and drivers, fundamentally at least, for the dollar. And we did see a couple of very big moves. Obviously, NFP week coming in last week. Gold went on an absolute tear, and I'll go into all that here as well. Coming into this week, we do have a couple of different news events. Obviously, this Monday is a holiday for both the dollar and the pound, or Britain and America as well. We have some small dollar news on Tuesday, CPI this week on Wednesday, which is going to be huge. And then there's also like Governor Bailey speaking. We have, bond auctions as well, the FOMC meeting minutes. And then GBP, GDP, we have PMI, we have UOM sentiment. We have a ton of stuff coming out for both the pound and the dollar. And so with that, as I mentioned, every week there are a ton of catalysts and drivers that can act as, I guess I'll say catalyst twice, that can act as a catalyst for volatile price action. And just kind of jump straight into it, I do have the dollar, the daily for the dollar pulled up here. And as we can see, it's been an extremely bearish week for the dollar. I did mention in my previous pre-market plan that I was expecting a small retracement for the dollar, especially being that this descending channel is becoming so fickle. As far as where my targets were for the retest, I had two, if I'm not mistaken. It was the first being this 382, and then the second being that 618 around the 105, 14, or 104.50 region around this bouncer break level here as well. After the news events this last week, and after seeing how price reacted overall, where we're sitting at the chart and everything else, as we can see, we have these 5 days. We have Monday into this Friday, which for some reason is printing as a Monday on my chart. And as we can see, right, huge bearish momentum into the 101 sort of level. And this is mainly due to the fact that, once again, we're trying to get a handle on inflation here. All of the numbers that are being released, as far as press release numbers and everything else is concerned, economic drivers are being, they're coming out pretty bad for the dollar, meaning that we're starting to slow down. We're starting to see the QT sort of take its shape, I guess you can kind of call it, within the dollar, and then bringing that sentiment into this coming week, right? Looking at the at the dollar and where it is on the chart as it stands, the most recent weekly, or rather daily, candle closes are looking extremely bearish, right? We have sort of a what is this? We can kind of call this like a spinning top, right? We have a tweezer top even, trying to break out of this channel and then getting rejected twice, 2 days in a row. Not only on the Thursday, but on the NFP Friday as well, right? Typically when we have these NFP prints, we get big moves to the up or downside. Did not see that whatsoever. Is looking pretty weak for the dollar. And I say all that to say, we do have CPI coming out this week, right? So as we've seen in previous CPI prints, if CPI is coming in at forecast or below the forecast, meaning that inflation is dropping, we see massive dumps of the dollar, because that would mean that our rate heights and all the QT is finally working, right? That is the entire purpose around doing all these different rate hikes, all these different things that the Fed is doing to, again, as a result, create a weaker dollar by driving down inflation. So once again, if we get a much lower CPI print, or a CPI print at forecast, which would be lower than the previous CPI print, I would expect dollar weakness in that case. And as we've seen week after week, we continue to see dollar weakness. And as I get into gold as well, it's been going on a tear. I would obviously like to keep that theme going into the coming weeks. So as far as my overall sentiment toward the dollar, I would not be surprised if we do get some upward creation, or at least a move into the 102 sort of 50 103 area. We do have sort of a range mid here as well, structurally and everything else. As far as fibs are concerned, I'm still we have this swing high to the swing low here as well. It does line up with the 236. But anything outside of that, I'm not really entertaining too much. I mean, there are still two very big levels and areas of interest for me, or we can kind of call it three now here as well. This 102 sort of 50 area, we have the 103.50 area as well. This sort of range mid, then the range high, and then the sort of ultimate range high between the range mid here at 103 and the range low at 102.50 is the bounce or break level up here at 105. So three areas of interest, three levels of structure that I'll be wanting to watch when it comes to the dollar, and especially since I'm expecting dollar weakness into this coming week because of a potentially lower or at forecast CPI prints. Wouldn't be surprised if we get, again, small move into the 102 sort of 50 area and then a big move lower after we get the news releases and everything else. And as we look into the most recent weekly candle close, I mean, it does add a bit more conviction. Although the print wasn't bearish, we didn't get like a bearish solid body close or anything of that sort. This is notable, right? Just because we did get a quick pop on the NFP drop, right? NFP numbers came out, dollar surged for a bit, but it wasn't sustainable, as we can see, right? Huge upper wick creation. Well, not huge, but enough to say, we're going to continue to be bearish. Also, this is still below the 103 sort of area, that range high, we can kind of call it. The next sort of level for me, right, is obviously that 101 sort of 50 area. This is a level that has been used as support 3 times now, as we've seen, and we're going to go ahead and see it, this third time be tested once more, maybe a fourth. Excuse me. And so, especially with the CPI numbers coming out this week, I'd like to see once again how these levels react and how price reacts to these levels and everything else. Because if we do get a clean move below 101.50, we no real traffic into that next level, which is right around 100. And obviously, looking left is a very well respected level of structure. We've printed here many times. It's acted as support and resistance simultaneously. And so with that, again, if we do get clear weakness below 101 sort of 50, clear move into 100. On top of that, I do have a ton more conviction in this being the play, especially after especially with the CPI numbers coming out this week and everything else. Excuse me. And obviously looking back, how can I have so much conviction in there potentially being a lower CPI than there was last month. We did get a noticeable drop in CPI last month after the rate hikes and everything else, so much so that obviously the Fed is starting to entertain maybe taking a pause on the rate hikes, that whole thing. We know they're not going to do that, but the fact that, again, we did get a noticeable enough drop in CPI for them to even mention that, I would not be surprised if we continue to see the same sort of trend. But we'll just, again, I don't have the crystal ball. We'll just have to see. Support is still support, so we should treat it as such. When we look at it on the monthly, though, right? Monthly's looking like it's ready to once again move into that 100 level. Printing, obviously last month we did get that solid body below 103. It is a small sort of nuanced close, like structurally, right? I mean, at the end of the day, 103 is a very respected level. So if we get a solid body close below that, especially from a monthly perspective, that is something that's remarkable. It's something that is notable. And so with that, going into this coming month, we can already see, 10 days, 11 days into the month, we are starting to break below 103. Once again, I think this week is going to be a big week to determine whether or not we're going to stay bearish or if we're going to try to reclaim these 103 levels as well. Just again, because of the CPI numbers and their impact. Again, if we get, CPI numbers at or below forecast, that's extremely bearish for the dollar, as obviously inflation is on the down, the sort of downtrend, and with that, when inflation goes lower, so does the dollar, right? Because that's just kind of how it works, right? Like the dollar gets inflated, it goes up; it deflates, it goes down. It's just how it works. I don't make the rules. And so with that, I hope that makes sense overall. Once again, I'm of the sentiment that we're going to continue to see dollar weakness. That's what I would like to see, of course, especially being that I've been bullish on gold for the past fucking year, past couple months, everything else. Once again, just to kind of sum it, I would not expect, or rather I would not be surprised, and I would expect the move into 102 sort of 50 area before a move lower, and eventually breaking that 101 25 sort of area, that range low here as well. If there is any week for it to be done, it would be CPI week, especially with we can even look back, right? Like let's look over here. We can do CPI year on year, and then the last CPI print was March 14th. This was at forecast. Let's go here and look at March 14th at forecast, and I can guarantee as we can see, there was weakness here, right? So much so that we did get upper wick creation and everything else. What happened thereafter, I mean, it's not, I'm sure I could look back at the news events and everything else to determine what catalyst created this big pop. But overall, the sentiment is that not only did we get a CPI print at forecast, but we did see continued downside thereafter, regardless of the pop that we saw that Wednesday. And so again, I am of the same sentiment. CPI numbers coming at or below forecast is extremely bearish for the dollar, bullish, obviously indices and gold. So with that, I hope that made sense. That brings me into JPYBasket. Not a huge week for the yen, especially since there weren't any drivers or news catalysts or anything of that sort. But we did make a couple different moves from a weekly perspective. Nothing super crazy here from the daily. As we can currently see, I did mention support is still support, and we did see that bounce, that very quick bounce early into the week for the yen, and we're still playing around above that 8,000 level. Once again, I've said this a million times, resistance is still resistance, support is still support. So until we break that 8,000 level with strength, an engulfing candle of some sort, I am not going to sort of switch my stance by any means, right? We're ranging within this, within these levels. We have a very high likelihood of going into the range highs, or at least retesting, retracing into the 618s and everything else. Until we do that, I'm not sort of switching my stance once again, unless we break the 8,000 level, that whole thing. And so, as far as where we're at on the chart, right? I mean, it does look like we're getting ready to break that 8,000 level, but I'm not gonna say anything definitive or jump for joy until that 8,000 level is broken with strength. And we can even look at that on the weekly. The most recent weekly candle close, it is looking a bit bearish because of the upper wick creation, the long wick to the upside. But in many cases, this could be like a morning star reversal and continuation to the upside. There are still sort of higher lows being printed here as well. So until we again break that 8,000 level with strength, I'm not sort of jumping into any conclusions or anything of that sort. As long as the yen and the pound are decoupled, I am happy for the most part. And with the move to the downside that the yen is looking to make, we are starting to see GBP strength. I also want to highlight, right, early on when we started to see a lot of the QE and the money prints and everything else, and inflation was going crazy for the dollar, that ended up turning into weakness for other currencies, across the board, not just the pound and the yen, but the Aussie dollar, like a bunch of other currency pairs as well. And so with that, we're starting to see the opposite, right? We're starting to see QT for the dollar. We're starting to see inflation dropping and everything else. And so it wouldn't be a surprise, or it wouldn't be crazy to expect the exact opposite to the prior situation, right? We saw crazy inflation with the dollar value driving up, and then the pound and the yen dropping thereafter. We're now seeing the dollar going down. Wouldn't be surprised to see the pound and the yen going up thereafter. Hope that makes sense. But once again, this is still support. This sort of range mid is still sort of a stopping point for price. And so until we get a break above or below those levels, I am not going to jump for joy in any form or fashion. Looking at it on the monthly perspective, nothing super definitive just yet. Just sort of, wick creation from my perspective, right? We did get a very clear rejection last month off of the 618. So you would assume that we continue to see downside. But again, I'm going to be looking more towards the weekly and daily time frames to sort of preempt those moves, because obviously it's very clear here. If we get a solid body close below the 8,000 level and break these local lows, clear weakness, clear move to the downside thereafter. But if we still sort of form rounded bottoms above the 8,000 level, I would of course assume that we're going to be moving into the range high thereafter. Overall, as far as what direction I want, what sentiment I'm of when it comes to the yen, overall, I don't care what direction it's moving in. I would just like for both the pound and the yen to remain decoupled, right? So if we're seeing clear weakness, I would like to see clear definitive weakness below 8,000, and then GBP strength on the other side of that. And if we start to see rounded bottoms here for the yen, I would like to see GBP weakness. But the pound has been looking strong, right? So of course, in this case, I would want to see that yen weakness as long as they're remaining decoupled and everything else. I hope that makes sense. So going into the pound, this is the strength that we're starting to see here, right? I did mention this and I previewed this in the previous pre-market plan. We did get a big candle closure with strength into this level at 124. It wasn't enough to break all the way through it, just poked its head above. But with that said, right, we did get a continuation candle thereafter, and it's looking like we're getting a pretty definitive retest of that 124 level. So we might finally get this this inverse head and shoulders, playing out and everything else into these coming weeks. Once again, I'm of the same sentiment. I would like the pound and the yen to remain decoupled. So if we can get this break retest of 124 into 126, 127 sort of area, that would be ideal. But again, I would need to see stability above this particular level. Looking at it on the weekly, it is looking like we're starting to gain strength here. We did reject from the 618 level multiple times, but looking left, we're finally starting to break the local highs with strength and a solid body. The next level is that 126 level I just previewed in the on the daily time frame. And so with that, you can say in many ways that the 126 area is programmed, especially with the way that we're breaking local highs and everything else. But resistance is still resistance. I would need to see the play into 126 and the reaction to that level before making it definitive in my mind, at least. And then anything above that, if we do get that big break above this local high at 126 and then that trend line around like 128 sort of area, the inverse head and shoulders is in full effect, and I'll be treating it as such. We could also kind of call this like a double bottom here, right? So I mean, measured move is a little bit smaller into the 786 at 130, but again, we'd need to see reactions at those levels before we can make any sort of decisions on whether or not we're going to see continuations and that whole thing. But as it stands, it is looking like we're going to be moving into that 126 area, and I'm going to be treating the chart as such. I am of the sentiment that we're seeing GBP strength, and I'll be treating it as such. Even more so when we look at it on the monthly, right? I've mentioned this time and time again. This could be early in the month sort of upper wick creation, but as it stands, right, this is a solid body above this liquidity zone, one that we broke down below before and has been used as support many times in the past. So the fact that we're reclaiming this level is bullish, right, in itself. As I've mentioned time and time again with these arrows, we get the big push, break, retest, and a move higher, right? So that's kind of the sentiment. That's kind of the sentiment I'll be going into this coming week with, especially with GBP, GDP coming out, and then we have Governor Bailey giving his speeches twice throughout this week as well. The way the chart is looking, it is looking primed for GBP strength if we can reclaim some of these levels on the weekly and daily time frames. Once again, I would need to see clear stability above 124. If we reclaim this level, obviously, then I'm playing these things level to level. If we reclaim this level at 124, 122 is programmed. If we reclaim that, then 119 thereafter. But if we can continue to make rounded bottoms and wick into 124 and bounce from it, obviously the sky's the limit into 126 and 130 and everything else thereafter. And that's exactly what I'd be wanting to see. Once again, as long as we're seeing GBP strength and yen weakness or vice versa, I'm happy overall. But with the GBP strength that we are seeing and the potential yen weakness, it is looking like we might be primed for a GJ pump, although the daily chart does not really reflect that. So let's go ahead and get into it. Let's go ahead and pull up the charts that we're going to be trading for the week. We'll start with GJ. I want to go ahead and start with the weekly chart here as well. And so this is something I've highlighted time and time again. I feel like I'm saying time and time again, like 20 times in a row. How many times can I say time? We are currently squeezing on the weekly chart. I did mention in the previous week's pre-market plan that we have so much strength, right? We have so much strength above 162. We are going to be looking for buys, especially above 164 on intraday time frames. We did see that, which is great. But once again, we've encountered a level that we've seen in previous weeks here as well, that 166, 618 sort of weekly level of liquidity, that weekly level of resistance here as well. And we've rejected from this level so many times. We reject, and obviously this most recent weekly candle reflects that as well. When we get these bigger rejections from 166, although, looking left, right? Although this candle is printing above the previous ranges, I have to be cautious because 166 is such a respected level of resistance. Every time we typically come into this level of resistance around 166, again, in confluence with the 618, obviously looking left, we can see how many times we rejected and broke down thereafter. So I want to, again, remain cautious from that perspective. This could be an evening star reversal back down into the 157s, the range low and everything else, or even into 161, 162 for a retest before we move higher. But with that, I'm going to be wanting to look towards intraday levels and everything else, especially that 164 and 166 level. We're sort of in like a range, I would say, right? We have the 166 range high, the 164 range mid, and then that 162 range low on intraday levels. And you know, it becomes a ton more definitive when we look at it on lower time frames, as we can see on the daily. This is a huge level, right? We have a potential double top here. We have a clean wick rejection into 166. A level of liquidity looking left has been respected many times, also in confluence with the 618. It says that all the makings of being a clean reversal back down into previous range lows, right? Wrong. Because as we can see, right, we do have, you know, we have a high, we have a low. Oh, excuse me. We have a high, we have a low, and now we have a potential higher low, right? So, as far as wanting to get short is concerned, I want to highlight this once again. We have the range high at 166, the range mid at 164, and the range low at 162. This 164 range mid is a very important level because it's acting as a stopping point and a sort of bouncer break level for moves into both of the range high and range low, right? So into this coming week, and I'll go into this on intraday time frames as well, into this coming week, I'm wanting to see definitive strength or weakness at this particular level, right? I don't want to take trades in the middle necessarily, but I do want to take trades on the break and retest of 164 and the break and retest below 164 overall. Just because, again, looking left, this has been a very well-respected level of structure, and now because it's turning into a range mid, it could act as a very well-defined pit stop for price to make its move into, again, either the range mid, or rather the range high or the range low, excuse me. And so with that, on the 4 hour, it makes a ton more sense here as well. Because as we can see, right, we had a very big rally, this big, you know, we have a very big fickle trend line here as well. We tagged that 166 resistance, and again, looking left, the last time that we tagged 166, what did we get? A big reversal, break retest below 164, and a move lower after a little bit of consolidation. What are we seeing now? Again, big push into 166, huge rejection, evening star rejection, breakdown below 164, and we're starting to see that the makings of what could be that retest, right? We're getting a small deviation here with the prints above 164, but as we can see with the most recent 4 hour candle close, clear rejection of 164 potentially, right? Because again, looking at it from both perspectives, we have, you know, this is such a choppy range. This is disgusting, honestly. But we have clear rejections to the upside, clear rejections to the downside, and as we can see, it's just squeezing. It's squeezing a little bit higher each candle closure. And so for me, as far as where I want to be positioned in the market, I need to see clear and defined weakness below this level to get short, right? I need to see clear wick rejection. I need to see something like this. I need to see something like this to really have enough conviction to get short here. Otherwise, right, we're starting to or at least we're trying to form a base above 164. As we can see with these wicks and everything else, we're at the mercy of the range as it stands. I'm waiting for a definitive break above or below this 164 level because it's such an important and pivotal level on the chart to make a decision on as far as where I want to position myself in the market. And as we can see, right, these are arrows that I placed last week and they held true. They're going to continue to hold true into these coming weeks just because, again, it can only go one of two ways. Either this is we have this huge reversal back to the downside, break, retest of that, that initial structure we broke out of initially, right? Move lower, or the reclaim of that initial level at 164 and a move higher, right? Two areas of interest for me if I'm wanting to get short here. Either one, that 164 reclaim wick rejection and lower, or two, we have the 618 and 165 sort of area of resistance here as well for shorts. And then, I guess we can call it three. If we do get into 166, I would consider shorting into 166, or rather shorting from 166 all day, every day. If not, I'm pussy. And then on the other side of that, right? As far as reclaims of 164, bullish reclaims and everything else, if we do get a clear and definitive break retest, a very clean wick and strength above 164, I would take longs into 165 and 166 all day, every day. Just because, again, I've mentioned this 100 times, I am bullish above 164 and bearish below it. And so, again, I'm going to be playing these things level to level as I do every week. Looking at it on the 1 hour, it becomes a ton more clear. We do have a very clearly defined ascending triangle here as well, one that is notable, one that we should not ignore. And as we can see, right, price is just continuing to squeeze, right? It's continuing to make higher highs, higher lows. It's, you know, we get these big pops, these big moves to the upside. They end up turning into wicks, right? Like, then even here, this is an NFP candle, huge momentum to the upside. We start to form a base above 164, clearing out the ranges, looking to the left. Obviously, solid body closes here are much more bullish when we have this clearly defined structure and this weakness below 164. So if we can continue again to see stability above these levels, above these previous candle closures looking left, that should be a bullish move. That should be a move to the upside, right? But looking at it on the other side of that, because of course we have to have both perspectives. This is a local level of resistance. This is a local level, this local fib, the 786 and 618. In my strategy, when we get clear strength above those levels, you start to see price blow past the 618 and 786. That is clear bullish momentum. We don't have that just yet. As we can see, looking at the most recent candle close, we were going to start to see bullish momentum until price just reversed on itself, right? This is starting to get a little bit choppy for my taste, but that means that a bigger move is getting ready to play out, because again, price is just sort of coiling up. It's starting to find its base, whether it be to the up or to the downside, and it's starting to squeeze in that direction. So we need to be very vigilant and aware of the fact that a big move is coming, whether it be to the up or to the downside. It is a bit clearer for me to determine where price will actually end up, based on a couple of different things, right? First, if we are going to see a bearish scenario, I would need to see a clear break retest below 164. Also, this level of structure here, this trend line, very well defined, and it will be a sort of a confirmation for me to get bearish to get short if we do break it. If I see a clear break of this trend line and of 164 and a retest of 164, I'm going to want to be getting bearish or getting short all day, every day, because we are, again, reclaiming previous levels of resistance that we're trying to turn to support as it stands, right? Again, looking left, look at all this price action. Look at all the times that we try to test 164 and got knocked back. Test 164 and knocked back. On the other side of that, right? Because we've tried to test this level of resistance so many times and getting knocked back, we're finally turning it into support, right? We finally got that big engulfing candle to the upside, and we're starting to build a very small base. Although it looks very weak in momentum, we're starting to build a very small base above 164, And so if we can continue to see that stability, there's no reason why we wouldn't see the squeeze fully play out and see the ascending triangle make its move into 165 or potentially higher than that. As we can see, once again, if I start to see a clear rounded bottom, clear strength, clear width to the downside, much like we saw here, much like we saw back here, much like we saw back here, I'm going to want to be getting long, right? A couple different things. I would take this one of two ways. First, I would take the downside rejection, the wick, into 164 and buy it into the ascending triangle break and then into 165 thereafter. Or if I want to play it a little bit more safe, once again, I'm open to both possibilities. If I want to play it a little bit more safe, I can wait for the local high to be broken, break, retest with strength, and then take the move into 165 and higher than that. Hope that makes sense. Literally super simple, super straightforward. Either, once again, we get the break back below 164 and below these levels of structure, break, retest lower, or we see stability above 164, break, retest, and higher, or again, I get the ascending triangle, break, retest, higher. Same thing. Hope that makes sense. Going into gold. Gold is looking absolutely insane. Let's go into the weekly. Gold is looking absolutely insane, going on an absolute tear, especially with the dollar weakness that we're seeing. This sort of this arrow that I did draw out here is sort of playing out to a T. I would have obviously appreciated a little bit deeper of a retest, but once again, regardless of that, we are seeing it play out. Looking left, this is extremely bullish because not only did we get a break of resistance, we got a solid body close above this entire range. This is the first solid body close in the last 952 days. That's insane. We're technically in price discovery, right? Not necessarily price discovery, because unless we break the all-time high at 2077, we won't be. But from the perspective of like having no traffic and having a clean level of structure for price to move through, we are looking extremely good. It's almost like the 2077 monthly level is sort of programmed, or at least that local high at like 2035 sort of deal. Just because, once again, we have not had a solid body close above this range of candles in 900 days, which is absolutely insane. Once again, adding a ton of conviction around seeing continued dollar, or rather continued gold strength. Also have the inverse head and shoulders here as well to back that up. Bringing us not only into the 2077 range high, but also a bit higher than that at 2150 if we get there. Looking at it on the daily, it's so funny too, because I did mention, like, you know, we did get this this big retracement after this huge move into 1954 and everything else, and I was expecting maybe, you know, maybe we do get a retrace on gold after such a hard move. One of two things: either we get that big retrace much like we saw back here, or we get a bull flag. We saw the latter. And so as it stands, right, we got the big move out of this sort of box, out sort of this sort of consolidation range. The bull flag ended up playing out. What happens next is that we wait for the retest. And a very clear and well-defined level of structure for that retest would first be that 1998 sort of 2000 level, and then thereafter we can look at intraday levels there, intraday levels as well, excuse me, to see where price could end up falling before making a move higher. For me, once again, 2000 in the perfect world would look good. Thereafter, 1959 would look pretty good as well for a retest, bullish retest, excuse me, on the daily. 4 hour always becomes a ton clearer. For me, once again, 2000 becomes an extremely interesting level for a retest, a break and retest. We have, not only did we get the bull flag on the daily that played out, we have another bull flag potentially forming here as well on the 4 hour. Huge upside potential, or rather huge move to the upside. And now, as we can see looking left, a very well defined structure, right? We have, you know, resistance now turning into support at this 2000 level. A tap, and now looking left, or rather looking to the right, excuse me, it just looks absolutely, this is exactly what you wanted to see structurally to want to take buys, right? And so if I start to see this rounded bottom, like much like we saw this wick here, we start to form a rounded bottom into this level of resistance now turned into support, also in confluence with 382. I want to take buys into 2077, because once again there is not a ton of traffic into these levels. We can also kind of make this a range mid, this local high at 2030 to kind of break. That could be like a scale-in, right? So again, if I start to see clearly defined strength above 2000s, I don't want to get bullish here. I want to start longing around here, and then thereafter that local high, if we break, retest that local high, that's another opportunity as well to get long. If we start to break back down, we do have a local 618 here as well, around 1980, 1978, and everything else. Perfect world, I would wait for 1959 to get bullish thereafter. Those are sort of the local levels I'm going to want to play. But overall, what would be ideal would be this bull flag playing out at 2000 and getting long at this level of liquidity. 1 hour always becomes a ton clearer here as well as we go into lower time frames. As we saw back here as well, we did get the buys on the break and retest. I can go ahead and delete this now. We're wanting to see basically buys on the break and retest here of 2000 now, right? I mean, it's pretty well defined, especially looking left. Once again, always looking left. 2000 acted as resistance, now acting as support, right? Very well defined tweezer bottoms here. I would like to see one more retest into 2000 before getting long. If we could, again, establish a rounded bottom there, that would be ideal for me to at least take it into the local highs at 2032 or higher than that at 2070 all day, every day. And then outside of that, if we do start to break down early into the week, there is another well-defined level of structure around 1984. This is also in confluence with that local 618 I just mentioned on the 4 hour. And then outside of that, I'd rather wait for 1959 outside of 1972, although this is a well-defined level here as well. This is a range mid. I don't necessarily like to take trades around the range mid, so I'd rather, again, either one of three areas: the 2000 break and retest, the 1980s break and retest, or the 1959 break and retest. I hope this makes sense. But that pretty much sums it for me. Pretty simple and straightforward trading plan for this coming week, as with every week. Once again, either for GJ, either wanting to get short on a reclaim below 164, break retest into 162s and lower than that, or starting to establish a rounded bottom on top of 164, especially after breaking local highs and making that move into the ascending triangle, 165 and higher than that potentially. Going into gold, I'm wanting to see a bull flag established, going into gold, I'm wanting to see a bull flag established around 2000, see a rounded bottom on 2000, break retest and higher. If we don't see that, if we start to break down, I would consider the 1980s 4-hour 618 and level of structure here as well. And then worst case, I would take the 1959 buys thereafter. I do want to make it clear that, especially with the CPI news coming out this week, this is going to be a pretty volatile week for the dollar. If we do get a print at forecast or below, that is extremely bearish for the dollar, and of course that would strengthen my conviction for gold longs. Yeah, that pretty much sums it. Future me, God bless you, bro. Stay disciplined, stay consistent. You're the man. Don't, just continue to do your thing. God bless you, bro. I love you. I hope you're living your life to the utmost, fulfilling every aspect of your potential and everything else. And yeah, God bless you. Happy Easter. He is risen. And yeah, thank you, Jesus. God bless you guys. God bless future me. And yeah, take care. Love you.